In the current economic climate, dealing with a sudden loss of income or the thought of hunting for a new job is difficult. The majority of individuals are, in fact, unprepared for a recession. How well prepared are you if everything changes? You may have lived in relative affluence and income throughout your career, but have yet to be able to save much of your money. Can you endure everything when everything is altered? You may invest using the money which you borrow. Investor Charlie Munger predicted earlier this year that when the stock exchange collapsed, there would be significant market instability. The question of how people can survive an economic downturn can be raised, given the financial arrangement's low cost, and that is what this film is about. Hello 101 community, welcome back to our YouTube channel. In this video, we will provide you with 4 tips to invest during the recession by Charlie Munger. Recession investing is not as terrifying as you would imagine. For those who are patient, have done their research, and have the financial means, it is actually easier than you might think. As an investor, having a plan in place to assist you make decisions about your investments is essential during a recession. Before we start with the tips, here are some basics you need to know. What is recession and how does it affect each of us? How to define a recession is a subject of debate among economists. According to the National Bureau of Economic Research, NBER, a recession is defined as a significant downturn that lasts for more than a few months and has an impact on the entire economy as a whole, rather than just one specific industry. In other words, it will have an impact on practically every industry. The interval between the economic cycle's high and low points is known as a recession. They are typically not very long. The average length of a recession since the end of World War II is 10 months. Cost of living increases. You might discover that everyday necessities like groceries, gas, and clothing are more expensive now than they used to be when inflation is a factor in a recession. People frequently adopt stringent budgets and reductions in discretionary spending due to rising costs, making it difficult for them to make ends meet. Job loss or reduction in hours. Companies frequently cut back on workers during a recession to save money. You run the danger of losing your job or having your hours cut. Difficulty in getting a job. The labor market has been dominated by employees for some time. As firms battled for a small pool of workers, they could land new positions with better pay and benefits. That's likely to alter during a recession, with competition for the few available positions getting tighter, and the time it takes to locate new work getting much longer. Here are 4 tips on how you can invest like Charlie Munger during a recession. Tip number 1. Invest in recession-proof businesses. Munger said that people need to identify recession-proof businesses and start investing in those businesses during the recession. In a recession, businesses that offer unnecessary services generally suffer first. Customers can do things like painting their own homes or cutting their own grass. Investors should search for businesses that provide goods or provide services that consumers can't readily cut if they want to reduce downside risk during a recession. These businesses include those that provide utilities, insurance, healthcare, basic necessities, and food. As people search for deals, discounters also do well. One thing that recession-resistant businesses have in common is that demand for their goods and services is comparatively inelastic. Even when money is tight, consumers' purchasing decisions are not very flexible. Among the best examples are utility companies. They offer water, power, and gas for cooking and heating. Since consumers find it difficult to stop using these services, these businesses typically fare well during recessions. Additionally, because most utility rates are established through agreements with various government agencies, they are not subject to price pressure the way consumer goods are when demand declines. We can look to the Great Recession of 2008, when stock values plummeted, to get an idea of how this stability translates into the share price. The Dow Jones Industrial Average dropped from 12,650 at the beginning of January 2008 to 8,000 a year later, a decline of more than 35%. It did rebound significantly by early 2010, but only partially, stumbling back to 10,000 in the first few days of January 2010. But even when the market collapsed, utilities maintained their worth. For instance, Pacific Gas and Electric Company, PCG, traded for around $25 in early January 2008. A year later, PCG was trading marginally higher at just over $26 per share, while the overall market had lost over 35%. Similar to other companies, American Water Works, AWK, began trading at around $21 in early 2008, increased somewhat to just under $22 by year-end, and then even more to $23 by January 2010. These may need to be better performances, but given that the market as a whole was in a sharp downturn, maintaining stability is actually a success. It also demonstrates that these businesses often have pretty stable earnings regardless of the state of the economy. In a recession, businesses that offer unnecessary services generally suffer first. Customers can do things like painting their own homes or cutting their own grass. However, certain service providers offer vital services that cannot be cut. Waste management is one instance. People don't just stop garbage pickup and let the rubbish pile up because of a recession. Therefore, it is not unexpected that Waste Management Inc. shares, WM, remained stable and even increased throughout the 2008 recession. Early in 2008, WM shares were selling at around $29, but by year's end they had risen to around $34, despite the market losing more than a third of its value. Another illustration is an auto repair and parts business. In most cases, consumers are forced to fix their cars when they break down, even if doing so is expensive. The 2008 recession was not too bad for AutoZone Inc., AZO. Before the recession really got going, the company's share price was about $120 in early January 2008. It increased to $132 a year later, and by January 2010, at the height of the financial crisis, it had risen to $155 overall. Tip number 2. If you are unable to identify long-term value, avoid investing. Avoid investing during recession if you are unable to recognize the long-term worth. Munger asserts that tiny enterprises are significantly more likely to experience financial losses while producing their goods, which would force them to fire employees, reduce employee hours, or cease operations altogether. It is impossible to considerably increase a significant company's wealth by establishing a small section of it. It is difficult for a stock to produce a longer-term return than the underlying business. It would be better if you resisted the impulse to raise your investment in a firm during a slump, and instead use those extra funds to hunt for enterprises in a field with a high potential for future growth and success. If you liked the video so far, press the like button and subscribe to the channel. Also, if you want to develop yourself financially and want to take your future into your own hands, check the links in the video description. You can also support the channel by visiting our merch shop and buy one of our products. The link is also in the description. And now, let's continue with the video. Tip number 3. Be patient and calm. Munger asserts that one of the critical elements is patience. Munger, who has had a long and successful career, has long held the view that the most reliable path to long-term market success is firmly dedicated to the fundamentals of value investing. Munger has stressed the dangers of caving into such pressures numerous times throughout the years. Controlling unbridled, unreasonable emotion is necessary. You need the ability to persevere through failure and bad luck without going crazy. You must be able to manage extreme success in all facets of your life without losing your mind. The ability to manage oneself is one that is necessary for all facets of life. Unfortunately, because investors tend to take action and desire to accomplish something, they sometimes act unreasonably. Some market players, such as portfolio managers and wealth planners, may feel pressure to demonstrate to customers the value they offer by their activities, making the pressure even more critical. As a result, Munger has worked to impart to others the importance of always exercising patience and waiting for opportunities, but refraining from being overly thrilled when they come along. Use this opportunity wisely, because a recession gives you a massive advantage over people who didn't experience one when things eventually return to normal. Another downturn will likely happen if we don't alter the way we purchase shares. Tip number 4. Munger doesn't like investing in crypto. According to Munger, a horrible combination of deception and delusion characterizes the cryptocurrency sector. Regarding the coins themselves, he added, "People assume this is a real asset. It's not a real asset." The 98-year-old investor lamented Wall Street banks and hedge funds' increasing acceptance of cryptocurrencies and claimed that bankers are far too quick to invest in the newest trend. "It kills me to watch people who were once seen to be extremely respected people enabling these things to exist in my own country," he added. Others believe you need to be involved in every hot trade. It is crazy and demented, according to Munger, to believe that someone can create a new token that will instantly convert a 12-year-old into a billionaire. Buffett's right-hand man added that the regulators had not recognized the risks of cryptocurrency because of its novelty. He blamed the government for not outlawing cryptocurrency sooner. He said, "The warning flags are wagging so obviously. None of this should have ever been permitted." Munger has indicated he would not want someone in the cryptocurrency industry to marry into his family and has compared it to a venereal sickness and an open sewer. But why should you invest during a recession? Profitable investment opportunities may arise from a crisis or recession as stock values plummet. The market can be undervaluing some businesses. Others might operate under a business plan that makes them more resistant to a downturn in the economy. However, there can be good reasons to back off. Financial markets frequently follow cycles of expansion, peak, recession, trough, and recovery. Research has shown that recessions have always been followed by rebounds. Even if they haven't always been significant or as quick, businesses also operate differently at different points in the cycle. Some businesses might take years to recover from a recession. Others might never fully recover. You could make or lose money if you invest. If you don't invest, you'll definitely miss out on any rebound in the market that may happen. You will also see the amount of your investment decrease in purchasing power ever so slowly over time if you don't invest. How to decide. Your desire to invest during a crisis or recession may be influenced by your solid financial situation, lengthy time horizon, the amount of time you want to hold an investment, and high risk tolerance. You are more likely to delay if your financial situation is precarious. It can be tempting to take advantage of the lower interest rates available during a recession. For many people, this can become a slippery slope because they may not be prepared for any financial difficulties that come up. They'll end up in serious debt and won't know how to navigate their situation. The best advice is to maintain your emergency savings account as tight as possible, regardless of high-cost debt. It's very important to pay off debt and stop paying those high interest rates. If you're paying more on your debt than you think you could earn from the investments, it might be smarter to get rid of that debt for good. Short-term needs. If you're looking to save money and you foresee having some high expenses in the near future, it might be best to not increase your investments now. Stashing your savings and worrying about spending later may be a better option for you if you expect to have a short time horizon. Retirement savings. Even in times of crisis or recession, saving for retirement should be a top priority. Consider investing for retirement to take advantage of your IRA or employer match, if available. Over time, every recession finally recovers and experiences growth. Investors can participate in one of the biggest market booms and avoid the volatility that frequently occurs when the economy declines by adopting a strategy focused on counter-cyclical businesses with strong balance sheets in recession-resistant industries. Long-term investors who are prepared to persevere through these uncertain times will eventually be able to reap the benefits. When the bear market is in full swing, they might also be able to sell rapidly, purchase more profitable assets, and position themselves in front of the recovery for even greater rewards when the market recovers. So, 101 community, we hope you can use this information for your personal benefit. Stay educated. If you want to see more videos like this, subscribe to our channel and click on the bell icon so you will be notified of every update. Also, check out the links in the video description. Remember, we live in turbulent times, the global economy is upside down, and we have made it our personal goal to deliver financial education to everyone who needs it. Watch our video appearing on the screen about how you can personally benefit in a recession. See you there.